This video is going through lesson 15.4, talking about calculating federal income tax. We have 3 learning objectives. You need to be able to post adjusting entries, you need to be able to adjust federal income tax payable, and you need to be able to prepare an adjusted trial balance. So adjusting entries, these are the adjusting entries that we have gone through so far. So they're just showing us what these will look like in our general journal. And the first thing that we're going to do then is we're going to talk about posting these entries. Now, this really shouldn't be anything new because we've posted from the general journal before. So just like we always do when we're posting, we're going to start with our date. We're going to then put in the post reference. So in this case, we're using G15, which stands for General Journal, page 15. And then we're going to put in the corresponding debit or credit to each account. So here they're showing us that we have a debit to our uncollectible accounts expense, and then we find our new balance. Here they're showing us the credit. And then the last step would be to bring that that account number up to the post-reference column on the general journal. And this shows that our posting is complete. Now, I know I've talked about this in class before, but it's really important that we're posting those steps in order. I know that sometimes students like to just go in and fill in those account numbers first and then go and fill in the numbers here. I really, really highly recommend that you do not do that. Because if you do that, sometimes we forget where we left off, and we might have filled in this post-reference, this account number in our post-reference column, even though we haven't posted that number yet to that account. And so, yeah, we have the account number, but we haven't actually posted the amount there. Calculating income before federal income taxes. So adjusted trial balance is the trial balance that we're going to prepare after adjusting entries are posted. So this is giving us a little view of our adjusted trial balance. So we have a trial balance that we prepare before our adjusting entries, and that's kind of how we figure out our adjusting entries. And then once we do our adjusting entries and we post those adjusting entries, then we're going to do an adjusted trial balance. And so this is really just showing us the balances in those accounts at this specific time. So to create our adjusted trial balance, we always start with our heading, and our heading up here is always going to answer 3 questions: who, what, and when. And then we're going to enter in the account titles of all of our general ledger accounts. So that's what they're showing for number 1 here. And then we're going to enter in all of our account balances, except for, this is really important, except for federal income tax expense. So that is down almost at the bottom here. We are not going to put a total in for that one because there's still some calculations that we need to do to figure out our final federal income tax expense. Okay, so once we do that, we're then going to calculate the total account balances of income statement credit accounts. We're going to include the account balance of income summary if the account has a credit balance. So income summary, it just depends on what we have going on. Sometimes we have a debit balance, sometimes we have a credit balance. So notice in this example, we see that income summary has a debit balance. But we're going to add up the total of the account balances in the income statement credit column. So what I always say is income summary is like our cutoff point when we're looking at our adjusted trial balance. So we're going to look at income summary and below, and we're going to add up all of our credit column. Okay, and so in this case, we have 4 numbers that we are going to add together. We're just going to kind of write that total down and hold on to it. Okay, then we're going to add up our total account balances of our income statement debit accounts, excluding our federal income tax expense, which we shouldn't have a total written in there right now anyway. Okay, we're going to include the account balance of income summary if the account has a debit balance. So notice we really have to pay attention to that income summary if it has a credit balance or a debit balance. So again, really this number, like this line here drawn, is not correct because we want to be starting at income summary. Income summary is our cutoff point. So we would be adding up our debit accounts from income summary to the bottom. So here's more numbers that we need to add up. This is really, really important that we're adding carefully when we're putting those numbers into our calculator, because even if we get off 1 cent, we're still off. We have the wrong answer. Okay, so I know that sometimes we think, well, we're close, it's only 1 cent, but it's still the wrong number. So here they're showing us our totals. So this is our credit column, and then this is our debit column. Okay, so once we have those two totals, we're then going to find the difference between those. And that will help us calculate our net income before federal income taxes, because we have not included that federal income tax expense in there. Okay. So they're doing that. They're finding the difference between those. And so here we get, this should be our net income. Now, it kind of depends on what we have available to us in our working pages, but we may be able to double check that number and make sure that it matches the net income that we have. So now we have to calculate our federal income tax once we have that net income. So different tax rates are going to be applied to different levels of net income. Each tax rate and taxable income amount on one line of a tax table is called a tax bracket. Marginal tax rate is going to be the tax rate that's associated with a tax bracket. So here is our tax rate schedule. And so here they're showing us our different amounts. And so I'm going to go back one more. So tax rate and taxable income amount on one line is our tax bracket. So here, the highlighted line here, this would be our tax bracket. When they talked about our marginal tax rate, this is that percentage here, okay? So what we're looking at, if you remember back a slide or two, our net income was like 103,000 something. And so we need to first find out the bracket that it falls in. And so we're going to first be looking in this first column. And so it's over 100,000, but it's less than 335,000 for our net income. So we know that we're going to be on this line, this tax bracket. So what that's telling us then, if we look at the next line, is it's saying we're going to pay a base tax of $22,250, okay? And then we're also going to pay 39% tax on the amount that's over 100,000. Okay, so whatever net income we have over 100,000, we're going to pay 39% on that. Okay, so here's how we're going to figure that out. They have it written up here for us. We're going to take our net income that we figured out when we are adding up that adjusted trial balance. So here's our net income, and we're going to subtract the 100,000 right here. That gives us our net income that's subject to that marginal tax rate. And so 3,518.97. We looked at this tax bracket and we are at 39% for our marginal tax rate. So that is at 39%. We're going to multiply those two numbers together to get our marginal income tax, $1,372.40. Now, that's not all the tax, because remember, we also had that minimum, that base amount of tax that we have to pay. So that's going to be the $22,250. So we're going to take that base amount, that minimum amount, and we're going to add to it what we figured out for that marginal income tax to get our total federal income tax of $22,622.40. Now we're going to have to create an adjusting entry for our federal income tax payable. And so they're showing us our federal income tax expense. And so what we're looking at here is, notice we are paying federal income tax, or we have that expense account throughout the year. And when we add that up, 5, 10, 15, 20, we're only at $20,000. But if we go back to this previous slide, we had to pay that 22. I feel like this number is wrong. Yeah. Oh, this is wrong. So this number is wrong. 22, that does not equal out, does it? So that should be $23,622.40. Okay, so going back to this, we are at 20,000 and we need our federal income tax expense to be 23,000. So really what we're doing here is we're finding the difference. We're taking that 23,000 minus the 20,000 we already have. And so we know that we need to increase our federal income tax expense by $3,622.40. Now, if we debit this account, we have to have a credit. So our credit is going to go to our federal income tax payable. So here's what it's going to look like then. Now, we would have, this is going to go under our adjusting entries. So, there's going to be a bunch of adjusting entries above that with the label. And so we're just adding that on to the bottom. So we're going to put in our date, we're going to debit federal income tax expense, and we're going to credit federal income tax payable. And then they're also showing us here our posting. We would post to each account and find our new balances. And so notice after we find our new balance in federal income tax expense, it now equals what we owed for federal income tax. Then once we finish that and once we've posted that, we're then going to put that federal income tax expense amount onto our adjusted trial balance. So this should be completely filled in and we should just be missing this number. Once we fill that number in, then we're going to add up our whole debit column and our whole credit column, okay? Not just from income summary down, but the whole columns. Now we want to then also make sure that our totals are equal so that we have our debit and our credit equal at the end. If our debit and credit do not equal at the end, that tells us that we have an error and we need to fix something. So I would always say if these do not equal, first thing is to make sure that our math is correct. All right, so audit your understanding. Number one, how does the trial balance serve as a checklist for preparing adjusting entries? So a business is going to examine each account to determine if the account needs to be adjusted. So this is where we are going to look at supplies. Okay, what is actually in that account on the balance and what should that account read? So it really just helps us check, do we need to make changes to different accounts? Number two, in what order can the adjusting entries be journalized? We're going to do this by the order that the accounts appear in the trial balance. So we're going to begin with our assets or revenue and then just make our way down. Number three, which accounts are totaled to determine net income before federal income tax? So we're going to look at all of our income statement debit accounts, excluding, this is really, really important, excluding our federal income tax expense. Now, if we forget that part, we're going to get wrong numbers, and then that'll throw off our federal income tax, and that'll throw off our adjusting entries, and that'll throw off our adjusted trial balance. So this is really important. Income statement debit accounts excluding federal income tax expense, and then all of our income statement credit accounts. Remember, income statement accounts start at income summary. Number four, what is the bracket minimum tax and marginal tax rate of the 25% tax bracket? Unless you have a book in front of you or you're looking this up, you're probably not going to remember this, and I don't expect you to memorize the tax brackets. So this is just the bracket minimum tax is going to be $7,500. The marginal tax rate is 25%. They will give that to us though in our working pages and on our test. Okay, so that was the end of 15.4. You can now go on to the 15.4 work together. Please make sure that you email me if you have any questions.